Here's a quick video analyzing the German DAX index. As you can see, it has been chopping around for the last several days with the prior rally stalling a little bit due to various reasons. But we've seen some weakness in German data of late again. In addition to this, Chinese markets have struggled. The yuan has weakened, which has raised concerns that demand from China will be hurt for German goods because obviously a weaker currency there means lower exports from Germany to China, all else being equal. In addition to everything else, we've seen bond yields rise across the world, especially in the US. The strength of dollar hurting equity markets there. So yeah, it's kind of risk off a little bit, and so the German DAX could be heading lower, especially because it didn't really hold this level that should have held today, right? This level at 15,429, which was the high from this hammer-like candle that was created on Wednesday. So we broke above that candle's high on Thursday. The rounded retest of that level should have held as support. It didn't, right? So that level broke. This is going to be resistance on an intraday basis now, and for as long as it holds below that level, the path of least resistance would be to the downside. Now, where do we go from here? Well, I think a key target would be somewhere around this green level here, which is where people who bought on Wednesday will have likely placed their stops. Some of those guys might have moved their stops to below Thursday's low, which is at 15,378. So that could be the next immediate target. But then if we break that and hold below that level, then the subsequent target would be below the low from Wednesday, where trapped long traders' stops will be below that level. Also notice that there's a double bottom there, right? If you move this across, you can see that that low has been defended for on two separate occasions, meaning that people will have confidence at that level. But given how market is behaving, it looks like it has set up a trap for the bulls, which may be raided later on in the day or in early next week. In any case, that's where I think the market is headed towards 15,225-ish, or slightly below that level, because there'll be a pool of liquidity resting below, right? It could go down all the way to this level. Let's just color that in blue, which is the base of the prior breakout at 15,181-ish. That level has not been retested on a daily time frame once we broke above it in this particular day. So I don't know what it has done on an intraday basis, but on a daily basis we have not retested that level. Anyway, that's where I think the market might be heading down to. Whether we will get there today, I don't know. It remains to be seen. But zooming into the hourly chart here, I can draw a box around this shaded region, and that would be an ideal entry area, I think, for the sellers, because you can see that level had been support on a number of occasions on this hourly time frame, but now we are below it, so it could act as resistance. Let's go down to a 5-minute chart to see if that level has been retested already. Well, it has, hasn't it? On the 5-minute chart, you can see price action more cleanly. We found support there, and then broke below it earlier this morning at when was it? Around 10 o'clock London time, 10:30. We broke that level. Market tried to bounce back, but then it broke down once again. So I think that's bearish, and I wouldn't be surprised now if the market were to head down to the levels I mentioned earlier. Anyway, that's my view. I think if we go back above that 15,400, call it 15,430, if we go back above that level on a daily closing basis today, then that would invalidate this bearish view. yeah, so that's my the line in the sand for me in this overall chop fest price action, right? It's not really trending in any particular direction, but I think the risks are skewed to the downside for the reasons mentioned earlier. Thanks for watching.